Hi everyone, this is Jason Burack of Wall Street from Main Street. It looks like Danielle DiMartino Booth was right about her connections at the Dallas Federal Reserve and other connections in our interview a couple weeks ago. She said that the Fed had become very politicized more than usual. I mean, the Federal Reserve has pretended it's been independent for a while, but we know that's not the case. So the Fed has, if you guys weren't aware of what happened yesterday, the Fed hiked rates again. This could be the weakest economy since 1987 in which rates were increased. Lowest quarter since Q4 1980, according to some data that Zero Hedge has compiled. They're quoting other sources here. Let me give you some perspective on how weak the economy is. So the Atlanta Fed had initially slashed Q1 GDP. It was 2.3% were what the model was saying, and they had slashed it in half. Actually, I think it was 2.6%, and it had been slashed in half to 1.3. And then they just slashed it again down to 0.9 for their projections for the quarter. So it's showing that the economy maybe is not doing as well as the Federal Reserve is pretending, but the Federal Reserve, they're PhD economists, so they can lie with numbers, they can lie with data, they can lie with math. Dr. Pippa Malmgren has talked about this. She said her dad worked, in with multiple presidents, I think 4 presidents, and he was one of the main economic advisors to presidents. And he said when the economists wanted to get politicians to stop arguing with them, they would just start quoting math and lots of data. So basically, the Fed can take any data point they want and say that, oh, look, you're wrong about GDP. Janet Yellen, in fact, called in her news conference. You guys should watch this 5-minute video here on Zero Hedge, where a reporter questions Janet Yellen, why are you raising rates into what looks like a weak economy? And Janet Yellen says, well, the GDP numbers, even though they're down and revised downward, she calls them noisy, which, I would say, which means they're wrong and a lie, but she called them noisy, which means they don't have much real world impact. And she said that the economy is creating jobs. Now, the ADP report may have says that there may have been some jobs created, but they're probably part-time jobs. And we know that the birth-death model is creating a lot of those jobs. Well over 100,000 jobs a month, the birth-death model is creating out of thin air by the Bureau of Labor Statistics. So, gold didn't collapse with this interest rate increase. The Fed is also planning 2 more interest rate increases. It looks like that Danielle DiMartino was proven right with her reading of Fed statements and also her contacts within the Federal Reserve. She said that they would probably actually raise 3 times this year, and it wouldn't be because the economy is doing better. It would be because for political reasons, Janet Yellen, who is a hardcore social justice warrior and snowflake, she's a hardcore Democrat. You guys can go look this up. Her political affiliations, as is almost every single person in the Federal Reserve, is a hardcore Democrat, that they want to help the Democrats win back congressional seats in 2018. And one of the ways to do that is either you let the economy get worse, or you allow asset prices to fall. And now that Trump has taken credit for the stock market going up, now he's going to get the blame if the stock market or other asset prices fall. So we'll see what happens going forward. But, these are some Zero Hedge articles about what has been going on the last couple days. And, when you add this up with soft Philly Fed data and the beige book with inflationary expectations, guys, there's a number of articles here showing you, and I'll put these articles, the link to them in the info section of the short little video, that it looks like stagflation is finally beginning to increase. So even if there's not wage growth, there's cost push inflation, which is forcing, prices higher in the supply chain and forcing, businesses, either restaurants, to reduce portions, either keep the price the same, reduce the portion, charge a higher price, maybe reduce the portion too. And, most consumers are not fully aware of this because they're not woken up. They're not woke news. They're not woke up like we are. But people are going to begin to realize that, their standard of living is being cut drastically, and it's not because of the evil, greedy capitalist or business owner. It's because these companies have to maintain some margin to survive, and their costs are going up. And a lot of it is because there's a lot more money and credit that's been out there over the decades chasing the same amount or fewer goods and services in some cases. So gold and silver are holding up pretty strong, considering one thing, people think that rationally that gold and silver should crash when interest rates rise, but if you go back and look through the 1970s, gold and silver didn't crash when interest rates rose. It took Paul Volcker drastically raising interest rates, I think, to 18%, and the people on the COMEX manipulating gold and silver prices and screwing over the Hunt brothers to get gold and silver to crash. So I think, gold and silver continue to rise because I think a lot of people in the market are starting to figure out that there is inflation coming back. There's been asset price inflation for a long time, but now we're starting to get inflation in the real economy start to accelerate again. We've had inflation in the real economy for a while, but the inflation in the real economy has started to accelerate again. And I think, we're going to have worse and worse stagflation. The Fed's Beige Book, which came out a few weeks ago, that was saying how a lot of business owners were expecting inflation to pick up one way or another. So inflationary expectations are the precursor, they're the signal to velocity of money. So I think, we're stagflation ahead, and gold and silver tend to do pretty well during stagflation, at least what we know from the 1970s. And this time there is no Paul Volcker to raise interest rates to, 10% or higher to stop inflation. The Federal Reserve, in fact, for years now has been targeting inflation. So, they've been underreporting inflation, saying that they want at least a 2% inflation target every single year. And they're going to get a lot more inflation than they bargained for going forward. And they're not going to be able to stop it like these cocky a-holes who are PhD economists think they can with a few levers here or there. Okay, guys, well, that's it. I'm going back to Washington, D.C. It was nice enough of Perry Ann Boring to give me a press pass for the DC Blockchain Summit. So I'm going back there again today for the second day. Okay, bye. Mo and I are trying to raise $1,000 per month for our Patreon account. We have over 2,600 viewers per YouTube video. So if we can get most of our loyal listeners or all of our loyal listeners to donate $1 per month or up to $5 per month, which would be amazing, that would cover most, if not all, of the money that we need. So we also accept one-time donations. If you go to the wallstreetformainstreet.com website, we accept donations in cash via PayPal. Fiat, you can donate there. You can donate Bitcoin through our Bitcoin wallet there on the website, or you can donate gold and silver. We have a gold money account, and we also accept mailed donations of physical gold and silver. Thank you guys for listening, and we appreciate any and all help. Please forward it to friends. Okay, bye.